Big week for the big banks. We're just moments away from Morgan Stanley's fourth quarter earnings. We're expecting revenue of $9.29 billion and earnings of 89 cents a share. We'll let you know what the company reports as soon as they hit the tape. But first, joining us right now is CFRA Equity Research Director Ken Leon. Ken, it's good to see you this morning.
Good to see you.
Your reaction to what you've heard so far on the banks?
The banks are setting a great tone. Results are better than the depressed views in December. Consumer strong. That's a core part of all the banks. The big question mark is really what's going on in terms of the corporate world, whether it relates to the capital markets or also for capital investment for spending, which also feeds the beast in terms of underwriting.
Ken, it looked like the business loan growth at J.P. Morgan was pretty meager. Is that an outlier? What do these bank results tell us about the health of businesses in America?
So commercial lending was mixed, and we're seeing a much more competitive environment. It's not out in January, but the Federal Reserve does every quarter a senior lending officer survey. And what it showed was that it's more competitive. Spreads are narrowing, covenants are easing. I think we've heard that story before.
Right.
But what that means is when you're booking commercial loan activity, it's a little less. The consumer is really the part that's doing really well. Mortgages, which are not there for originations, but consumers have money in their pockets, credit cards, consumer loans, home equity loans. They're looking really good.
You bring up the Federal Reserve. How much does a more dovish Federal Reserve factor into these earnings calls and what banks are reporting now?
So if you do the math, the banks get really revenue from net interest income and net interest income, which is their businesses. The direct effect is if we got one or two rise in the interest rates, it's going to help. But the economy and the businesses have to grow. That means new accounts. New accounts means more funds in those accounts, and that triggers higher net interest income. Good for the banks. We also saw it with Schwab yesterday as well. Not so good for BlackRock because you had lower market levels. But the banks, ultimately, these are large, diversified banks. So you almost have to fire on all cylinders to really have a great quarter.
We talked about this yesterday. It's really the demand for loans, whether in J.P. Morgan's case, it was only 1% growth in commercial loans, demand for mortgages, a double-digit drop for Wells Fargo. So it's the economy affects demand for borrowing by the customers of these banks. These banks are so diversified. Given the interest rate picture, they can make money on mortgages and particularly like credit card lending, for example. It's not the net interest margin, if you will, and what they can charge, what they're paying for deposits and what they can charge for these loans. It's the demand. That's what got hurt in the fourth quarter.
I think you're right. And ultimately, if the large banks can deliver in terms of recurring revenue, good cash flow, and I think that's what James Gorman is going to talk about today with its large wealth management business, is the ability to have a great franchise that you can grow as stable, and you're balancing that with a very volatile capital markets businesses.
Do you expect a recession over the next 2 years?
So we look at the CFO survey, which was more bearish than CEO. The CFOs, and this was Duke University, they're looking for a 49% chance of recession at the end of 2019. That number goes up to 92% in 2020. So that got my attention. And essentially then I come back to we need capital investment from the U.S. and the world. That helps the large banks in terms of traditional lending, but then also underwriting. When you look across this week, equity and debt underwriting were both down. Debt underwriting was down, you would expect, because tax reform changes. Banks can't feed stock repurchases because there's a limit on deduction.
Yeah,
but the equity underwriting was down.
It was non-existent in December, right? So
yeah.
On the credit markets. Ken, it's good to see you.
Good to see you.
Thanks so much. Ken Leon joining us there.